Hi, Assalamualaikum everyone, especially to my lecturer, Sir Syaril Syafiee. Today our group will present and explain about the international trade products by Hong Leong Bank. There are 5 international trade products that we are going to explain, which are letter of credit, banker's acceptance, overdraft, foreign exchange, and foreign telegraphic transfer.
Assalamualaikum and hello everyone. My name is Fatina Shazani Bitina Abdul Hamid. My metric number 254044. I will explain about the definition of international trade and finance. Trade is referred to buying and selling of goods and services, and those involved in exchange of these goods and services. International trade is referred to trading activities between different nations. It is also known as a foreign trade. International trade is characterized by the export and import of goods and services. Domestic trade is referred to trading activities of selling and buying the goods and services within a country.
Hi, my name is Bazirah binti Abdul Ghafur. Today I will explain all about letter of credit. First, I will explain about the definition of letter of credit. Documentary credit or letter of credit is the guarantee by a bank that they will pay the exporter in the event of the importer becoming insolvent. The bank's guarantee is provided by issuing an LC to the exporter on behalf of the importer. Next, letter of credit from Hong Leong offers first, letter of credit facility. Second, payment will only be made under LC when confirming documents are presented. Third, better opportunity to negotiate with the supplier for better credit terms and pricing. Fourth, may obtain import financing. Fifth, bank may assist to clear exchange control matters and related trade issues when the LC is issued. Next, I will explain about the purpose of documentary credit. First, the purpose is to convince the seller that some capital has been allocated to pay the seller, and thereby show it is safe to start production of the order. Second, to list the documents that the buyer will need in order to clear the consignment and specify the details the documents must bear. Third, to bridge the gap between payment in advance and open account terms. Alright, lastly, I will explaining about the advantages and disadvantages of letter of credit. First, the advantages to the exporter. First, an undertaking from the issuing bank that you will receive payment under the letter of credit provided that you meet all terms and conditions of the letter of credit. Second, shift credit risk from the importer to the issuing bank. Third, not obligated to ship against a letter of credit that is not issued as agreed. The disadvantages to the exporter are: first, documents must be prepared in strict compliance with the requirements stipulated in the letter of credit. Non-compliances leaves exporter exposed to risk of non-payment. Next, for importer, the advantages are: first, importer is assured that for the exporter to be paid, all terms and conditions of the letter of credit must be met. Second, ability to negotiate more favorable trade terms with the exporter when payment by letter of credit is offered. Last, the disadvantages for importer are: first, letter of credit assure correct document but not necessarily correct goods. Second, ties up line of credit.
Hello doctor, my name is Divya daughter of Ravi. My metric number is 256043 and now I'm going to present product 2 which is banker's acceptance. Okay, what is banker's acceptance? Banker's acceptance means an instrument representing a promise for future payment by a bank. is advantages to bankers' acceptance. First of all, smaller company gain access to lower rates in the money market. Second is bank earns a stamping fee to offset the loss of interest income on their traditional lending activities. Third is the banker's acceptance facility is carved out of the borrower's line of credit. So, risk to the bank is identical to lending under an operating line of credit. The last one, bank guarantees payment of the note at maturity is provide confidence to the market. Okay. Next is steps that involve in bankers' acceptance. First of all, the US importer places a purchase order for goods. Next, the importer asks its bank to issue a letter of credit on its behalf. This represents commitment by that bank to back the payment owed to the foreign exporter. Next, the letter of credit is presented to the exporter bank. Then the exporter sends the goods to the importer and the shipping document to its bank. Last, the shipping documents are passed along to the importer's bank. These are the steps that involve in banker's acceptance. Next is characteristic of banker's acceptance. There are three characteristics, which is credit quality, marketability, and liquidity. Okay, next is risk associated with bankers' acceptance. There are 6 risks, which is transaction risk, credit risk, foreign currency transaction risk, compliance risk, liquidity risk, reputation risk. First, transaction risk. Transaction risk is the current and prospective risk to earning and capital arising from fraud, error, and the inability to deliver product or service, maintain a competitive position, and manage information. Credit risk is the current and prospective risk to earning or capital arising from an obligor's failure to meet the terms of any contract with the bank or otherwise to perform as agreed. Foreign currency transaction risk is the current and prospective risk to capital or earning arising from the conversion of a bank financial statement from one currency into another. Compliance is the current and prospective risk to earning or capital arising from violation of or non-conformance with law, rules, regulation, practice, internal policy, and procedure or ethical standard. Liquidity risk is the current and prospective risk to earning or capital arising from a bank's inability to meet its obligation when they come due without incurring unacceptable losses. Last, reputation risk is the current and prospective impact on earning and capital arising from negative public opinion. These are the 6 risks associated with bankers' acceptance. And this is an example of bankers' acceptance form. And next is product 3 overdraft, and it will present by next presenter. Thank you.
My name is Fatin Nur Syazwani Betina Abdul Hamid. My matric number 254044. I will continue my friend's presentation about the product 3, which is overdraft that Holion Bank provide at their bank. Definition. Overdraft is a revolving line of credit that's available via a current account up to an authorized limit approved by the bank. It is repayable on demand. Periodic review will be conducted by the bank to determine whether to renew or recall to the facility. The facility provides flexibility. It is a utilization of any amount up to authorized limit, and it repay at any time via a current account maintained with the bank. Requirement. First one is age, 18 to 65 years old. Second, society, sole proprietors, partnership and club are also can apply this overdraft facility. Third is minimum initial deposit. It is a 500 ringgit. Who can apply? It is only for the Malaysian citizens. Fee and charge. The charge is stamp duty. Letter of offer at volume 0.5% of facility limit. Second is memorandum of deposit is RM10 ringgit. Third is letter of guarantee, if applicable, 10 ringgit. Statutory declaration charge per borrower. The general fee is a commitment fee and access fee. Features and benefits. The first one is short-term financing facility. Second one is flexibility to utilize funds as and when required. No fixed repayment schedule. The fourth one is interest rate paid to the bank based lending rate BLR. Obligation as customer. First one, customer must pay the monthly interest charge based on the utilization amount of the facility. Second one is customer must pay the outstanding amount owing to the bank upon cancellation or termination to recall of the facility. If customer fail to fulfill the obligation, customer will get the late payment penalty, default rate. Third is right to set off. The bank has right to set off any credit balance in account maintained with the Holion Bank against any outstanding balance. The fourth one is a right to commence recovery or legal action. This is an example of overdraft, how the Holion Bank calculated the overdraft for the customers. That's all from me. Thank you.
My name is Ainusna binti Abdul Halim and my metric number 255454. I will continue explain about factor 4, which is foreign exchange. Okay, definition for foreign exchange, we can see in right hand side the foreign exchange market, in other meaning, say in other word, which is forex, FX or currency market. Okay, in this market, determine foreign exchange rate for every currency. Okay, for the term of trading volume, it is far larger market in this world because it consists of all over the world, followed by credit market. Okay, for the main participants in this market, the largest international bank were the main participant for this foreign exchange. Okay, how the activities in foreign exchange is made or occur? Okay, the forex market is the global marketplace for trading currencies. It is not operate in one particular place as stock exchange was doing. International trade requires P and small business. Whoever buys or sells a particular currency in assessing. That means they buy or sell a particular currency, which means in other money in other country currency, they already assess the forex market. Okay, for example, if you are taking salary or pension from other country or other place and you were staying in Switzerland, that means you have to convert the foreign exchange or the current money to international money, which is you have to enter this forex market. Okay, banks to work on an international scale, trading huge amount of currency every day. For this reason, the forex market is the biggest in the world, trading over 5 trillion a day, affected by COVID-19 for foreign exchange in currency volatility during the COVID-19 outbreaks. Okay, we can see this in this slide. The outbreak of the COVID-19 pandemic has been unpredictable, and its impact to world market has been reflected in foreign exchange. Okay, three categories can be divided for the impact of COVID-19, which is the first one is shocking in demand. Okay, we all in this world, people have to be in a quarantine. Travel also restrictions, cannot go anywhere for travel or doing some picnic or whatever. For global disruption also has greatly affect for consumer, which is for buying and selling goods, services, for tourism and also hospitality, and moreover are affected by COVID-19. Okay, for supply shock. Due to the complex global supply chain, market to world spin will remain disrupted by this solution. Okay, in financial shock. Financial shock, we can say, as lack of cash flow and liquidity, negative impact will occur in this and sinking enterprise in an economic environment where global financial security nets are constriction and international cooperation is on the decline. Okay, last but not least, currency exchange. Latest exchange rate from the interbank foreign exchange market in Kuala Lumpur, rates at 1,130 are the best rate quoted for selected currencies by selected commercial banks. Okay, we can see here is the latest exchange rate. And for more information about this currency, how many ringgit when we buy and sell for other foreign currency units, you can visit the link down there.
Okay, let's look at the definition of foreign telegraph transfer. Telegraph transfer, actually called as TT and also known as telex transfer. Telegraph transfer is actually an electronic method of transferring funds utilized primarily from overseas wire transaction. It's normally TT is quite expensive since it's very fast nature of transaction. Other than that, this TT can be done and can be completed within 2 to 4 business days, depends on the origin and destination of the transfer. Okay. How we can use foreign telegraph transfer of Hong Leong Bank? There are two ways, which is via branch, which is traditional method, which we have to go to branch and we have to perform it. Or for now, it's a modern era and which is everything going online, so we can use via online too. Okay, if we are a branch, there are few steps. We have to go to the branch, we have to visit the branch and get the remittance application form and fill up it. Second, complete the form and identification form documents which is related to the application form, and then sign and keep the receipt after verifying details are correct. When the banker has verified all the application form and the identification documents which attached to the application form is correct and verified and completed, so you have to sign and keep it as a evidence for you, and your money will be deposited to the receiver qualifying bank account. For example, a man from here who are sending money to Singapore. So from your bank, once the steps are completed, which has verified by the banker, then the money will be transferred automatically to the Singapore bank. Next, we can also perform via online. As everyone know, now the world is going more to the modern era. So everyone are using online and are recommended to use online too. So it's easy and it can save time, save money, and a lot of benefits we are using online. So how to perform overseas telegraph transfer via online on by Hong Leong Bank. Okay, first of all, you have to go. Okay, first of all, if you are a Hong Leong Bank account holder, so you have to open an online banking. If you don't have online banking, you can't perform this telegraph transfer. You have to go. You must have an account of Hong Leong Bank before you using a product of Hong Leong Bank. So first of all, you have to log in for the online banking and connect with www.hongleongconnect.com.my. Okay, then you have to, once you are logged into internet banking, go to the international transfer. There will be an option, so you have to click the option international transfer, then you click transfer. As been shown in the first step, international transfer, there will be shown telegraph transfer TT. The down one, there will be transfer. Another option is add, edit, delete, favorite. So you have to click for transfer. The second step is transfer detail, from, transfer to who, currency, like that. Okay. So you have to enter the transfer detail. For example, from Malaysia, transfer to Singapore. For example, then the currency will be Singapore dollar. Of course, Singapore dollar. Okay. Then once you have entered the transfer detail, you will receive a TAC number on your mobile phone. You will receive an message notification. So you have to key in the TAC number to continue the transaction. Once you have key in the TAC number, you have to submit. Once you have the submit, so the transaction has been completed. Okay, the next part that I would like to explain is fee. How about fee when you are performing a foreign telegraphic transfer via online or via branch? The fee that we pay to the banker. Okay, there are two different ways, different method of different type of fees. First is interbranch telegraph transfer in Ringgit Malaysia or online telegraph transfer. Okay, inter telegraph transfer in Ringgit Malaysia is within 3 ringgit will be charged. The fee will be charged within 3 ringgit to 30 ringgit. The 30 ringgit is when which involves other countries' currency, other countries' currency means other than Ringgit Malaysia. Okay, so if via online TT, so for example, Ringgit Malaysia to Singapore dollar, it will be charged 12 ringgit only. If Ringgit Malaysia to other currency will be charged as RM 20 ringgit per item lah. So other currencies means except Singapore dollar, means Ringgit Malaysia to Hong Kong dollar, USD, it things like that. So that's all from me. Thank you.